So you have been buying through the pandemic. I'm curious as to what kinds of real estate you're buying. You've been in everything from student housing to senior living facilities. What kind of things are you adding to your portfolio, and what pandemic discount are you looking at?
Sure. Well, first of all, Vonnie, thank you for having me back again. It's really nice to be here. I wish I was in the studio, but we have had a very exciting year. It's obviously been a very interesting year, but one that's been rewarding for us. When we started Harrison Street, the idea was to focus on demographic asset, need-based assets, and we've seen the resilience of these asset classes over the past 6-7 months, and so that's really given us the excitement of continuing to invest. And so we've been active in senior housing, student housing. We've also been very active in the life science space. We really have been active in that space, both in the U.S. and in the U.K. We're investing in self-storage and also in renewable energy. So again, very consistent with our theme of finding assets that we think are resilient, demand-driven, and it's been a terrific environment for us.
Sounds like it. Was it a buyer's market up to now?
It's interesting. A lot of people, there is opaqueness right now. So there's a lot of people that have hit the pause button. Many investors that maybe are dealing with traditional real estate, office, retail, hotels, et cetera, who maybe have hit the pause button. For us, there is an opportunity to come in as the competition is weighing to really focus on high-quality partners in fantastic locations. We've continued to invest in opportunities where maybe group's capital partner has fallen away. So for us, the pricing has been excellent, but we very much think long-term about it. And we look at the fact that we can get 100, 200 basis points better yield in these asset classes that, this is now the second black swan event we've been through in our 15-year history, and we've seen how well they've held up. So we're very excited about the prospects of rental growth, cap rate compression, et cetera.
Take student housing, because you had obviously a huge amount of knowledge there. We know that there are, a good percentage of universities that may not survive this. So where are you targeting your new acquisitions?
Yeah, no, and it's a good point. We've been at 170 different universities. We're the largest private investor in the off-campus space. And for us, what we're focused on really is what we'll call the enrollment takers. Unfortunately, it is sad that, 5 to 15% of the universities and schools will fail. I mean, that's what Moody's has come out and said. And, that is sad, but there will be universities that will be the benefit of that. And so for us, it's focusing on those schools that we call enrollment takers, where we're seeing really strong demand for off-campus housing. Even at schools that have gone fully online, we're seeing that the students really want to be back in the college environment versus being, in their parents' basement. So we're seeing really strong demand in our off-campus housing at those schools that we'll call enrollment takers. So for us, we continue to think long-term that, online really just didn't work, and it's been debunked. And so what we're seeing is that college experience doesn't go away. And so for us, we're continuing to be very pleased at the data that's coming out of our portfolio.
Are you confident that those properties, along with the senior assisted living properties that you have, will be able to keep rents and fees as high as they were pre-pandemic, or will they have to come down, Chris?
Well, it's interesting, and, we'll talk about both student, healthcare is a very big part of our business. Probably 70% of our activity is in senior housing, life science, and, what we're seeing is what this has caused is really a choking off of supply. But the demographics aren't changing. The demographic waves in the aging population isn't changing. And what we're seeing in our senior housing property is that these are very safe assets. It is very safe when you consider a parent being at their home on their own with a home health care worker. What we're seeing is very low numbers of people with issues of COVID coming out of the senior housing facility. So we're seeing safety in these assets. We're seeing a lot of people wanting to move into these properties. So for us, the occupancy has held up during this period of time. And again, with the demographic wave behind us and with the choking off of supply, we think we'll see good rental growth in these asset classes, not to mention more institutional investors are going to want to invest in these asset classes. That's going to drive cap rates. That's going to drive cap rates lower in the coming years.
How much of the capital that you raised have you already deployed, and how long will you wait till you deploy the rest?
We're very much consistent across all these sectors throughout this year. We've, as I said, deployed $7 to $8 billion. We've also sold over $1.7 billion of real estate this year. So that points out the liquidity in our asset class, that even in this pandemic, there is still liquidity in the space. And so we've been on average, very consistent in terms of how we deploy capital. We have dry powder, and we'll consistently deploy it as we see the right opportunities. And again, for us, we've, invested $36 billion in these asset classes. And so, we've got a lot of data. It's got to fit our funnel. It's got to make sense for us. But, I think having the dry powder there, it's a great opportunity for the firm and for our partners.